patterns. That's all part of the prereqs. Next up, workshops. I've got 2 of them in the month of January, guys. Don't have February yet. We're working on that right now. So January 2021 is Wednesday and Thursday in Chicago, and then the 28th and 29th, Thursday, Friday, which is in Washington, D.C. And then we've got the 2-day Traders Camp coming up in January as well, 25th and 6th. That's going to be held in Atlanta. And then Monday nights, E-mini Trader Talk, right? That's this Monday as well. And then on the 22nd, guys, right after the Chicago Next Step event is the E-Mazing E-Minis class. So it's an advanced E-Minis workshop. We're going to go through the basics of what E-Minis are, how they work. We're going to go through how to trade them. Then there's going to be some advanced techniques that I haven't taught elsewhere yet that are going to be released there as well. And, of course, Power Hour with me each and every week. So here's the Follow Me page. For those of you that are interested, you can follow Better Trades on Facebook or myself, Twitter, YouTube, and, of course, my website through BetterTrades as well. All right, let's take care of this disclaimer thingy. I hope I haven't forgotten it over the New Year's holiday. Basically, it says I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, or set up something, anything you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into that trade, setup, or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Keep something in mind. Because I'm not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Excellent. Patty typed in, not a better way to start the week off than with you and Power Hour. Well, Patty, I appreciate that much. Excellent, excellent. All right, so admin, if you're listening, okay, hopefully you are. I am with you. For some reason, it is not starting up for me. So just as an FYI. All right. So guys, let's go ahead and start off with the traditional manner of what do you guys want to look at? What symbols do you want me to look into? What stocks or positions do you want me to bring up on the chart and do an analysis for you? Go ahead and type them in the questions box. And guys, this is what sets Power Hour apart from anything I've ever done. I think anything we do pretty much is taking a look at the stocks that you want to see. Instead of me just saying, hey, here's the ones I'm looking at, what do you guys want to look at? All right, so Rose typed in first, HSY, Hershey Foods. Now, guys, one of the things that you've got to make sure that you are conscious of is knowing where earnings are. What I like to do is generally, if it's a stock I watch, I don't just go and do this for the sake of doing it, but if it is a stock that I watch, I will snap a vertical line on Extreme Charts right on top of the letter, E in this case, for earnings, right? Next earnings date, January 27th. For me, generally, I want earnings to be at least a week and a half out for me to consider taking a swing trade. If it's less than that, you start getting into the overvaluation of options premium, and I'm a little bit more shy at that point with it. So the first thing I'm going to do, Rose, I'm going to take this over to a chart with no Fibonacci's, or not fibs, rather, with no moving averages, so I can draw the Fibonacci's on there. And if I grab a pen here, and we're looking for the biggest directional move closest to the right side of the chart. Well, this right here, stair step, kind of messes it up. To say, yes, that's the bigger move, and it is the bigger move from down here to here. The problem is I'd rather not have all the stair steps in there, besides the fact that we violated it with that move down. So realistically, this move, and when I say we violated it, we violated, watch, I'll instead of talking it, let me do it. By drawing the fibs in here, if I were to draw from that low to that high, we violated the 764, which said it's time to redraw the fibs. Right? So I'm going to delete that off, and we'll redraw the fibs all over again from here to here. Now that is a much better way of looking at the fibs, or much better place to draw the fibs than it was on that first one. the first one that I had drawn. And the reason for it is we do not have that violation right now on this because where we violated the 764. Now the ideal part about this one is look where this pushed to, guys. Look where this pushed up to. Right here, the 618, and what a great failure. 2-line move, 91.5 down to 88.25. Wonderful move. You'd be completely out of the trade, and then it's back up again, or was back up again near it. Now we've got those slightly lower highs, which I do like that, but it's already collapsed. Now I am not updated today. So let me do a quick little update intraday and see where it's at. With the market getting hammered the way that it has been, getting hammered the way that it has been, we may see that Hershey and many other stocks that you want to look at today are just getting slammed. When I wake up and see the NASDAQ is down 97 points in the pre-market, market's not doing well. Yeah, so there you go. That's today. So again, that big slam down in there. So we've already had the pullback in there on this one, Rose. So we've got to be a little careful there. If we look at where it's going, in other words, we just keep getting this bleeding where the market is just falling apart, right? The moving averages, if we really squeak in on them there, right? You can see the green moving average is on the bottom. That's the 21. So I'd really prefer to have at least the brown, the 55 period moving average, be the lower one, preferably the 8. Now over the next day or two, even if Hershey stays where it is, goes up a little bit, for sure over the next day we're going to see the 55 cross through. The 8 might cross over the next day or two to the downside. The next downside target, Rose, if you are trading this one, the next one I see is 86.25, and then 83 is the next downside target from there. If it does pull back up, which is what I would be looking for, I would look for that pullback up to the 89 and the failure off of the 89, and that would be my next potential bearish entry into this trade. Big move, was down, came back up and reversed the 2 lines. It's now 2 lines again. It's a little late in the game for me to take it, but that's because I'm not the breakout trader. If you are and you're good at that, then go for it, for anybody, not just for Rose who brought the candidate up. Let's see. Lois is asking for Amazon. Amazon. Okay, so I had Amazon down. I actually had a bullish trade on Amazon, which we got stopped out of today. So if you look at Amazon's move, it puts it down. If we closed right here, that would put us into bearish territory. First time we closed down through the 55, basically in this entire fib run, it's the first time we've closed down there. And we've only closed down, this one series below even the 21, the green line. So if we get that continuation move to the downside, I'm looking at that 632 as the next stopping point, and then 605. On the upside, we have that 654 and 676 are the 2 upside targets. Well, 654 and then 668, which is the 8-period moving average, and then 676. Those 3 targets on the upside for Amazon. So let's go over and take a quick look. Oh, excuse me there. Let's go take a quick look at the S&P. All right, here's what's going on with S&P. We had this downtrend, and I've been talking about this in the Market Insights for a while now. We had this downtrend take place. Market climbed back up right here on the 23rd of December and closed right at our downtrend line. We had a little bit of weakness the next day. The day after that, the trading day, the 28th, we failed, and then we took a huge gap up and a really strong push to the upside. It gave us a higher high here than the previous one, which was here, right? Gave us those higher highs in there and then failed. And on Friday's close or Thursday's close, last trading day, we got back inside of that downtrend. Today we gapped down, and it has been a phenomenal trading opportunity all day, every day. When you're going to move like this, it is just kicking tail and taking numbers on that trade. So Debbie asked if we're going to look at the YM. Absolutely. We're going to look at that. And there have been some great trading opportunities here today on that position as well. So Patty said, would you have had a clear and concise entry today for a day trade on Amazon? See, the problem there, Patty, is because we gapped in the middle of nowhere, it's hard to say that this was a clear entry into a day trade. I like it, as an example, if we looked at, from Thursday's data, we pushed up on Thursday and failed. That was a clear and concise entry. Failed right at a resistance line. Wonderful. Right? Yes. Here in the middle of nowhere, for me personally, just makes it a little bit tougher to be able to take that trade. So for me, the answer is no, not at this point. Did I see that? Debbie says, Happy New Year's, Rob. Almost forgot about you. Was about to go and run errands. What a great trading day, and some thanks to a great read, Trading in the Zone. Yeah, it is a good book, Trading in the Zone. It truly is. Yeah, so guys, with what's going on in here now, we've taken a big stretch today. We still have some more room to go. It looks like we've held a little bit at that 2,000 level so far. 1994, 2000. The question is, do we violate the 2000 on the close? That'll be big on the SPX. And then if it does, our next stopping point is going to be the bottom of this channel, which will be about 75, 76 or so before that 65, which gives us a pullback to the 618. That would be actually a really nice reversal and or pullback if we can get it down to that 68 if it dragged out a couple of days. With as big of a move as we had today, if it sustains itself there, I would be shocked, or let me rephrase that, I wouldn't be surprised to see a bounce come off of here over the next day or two just because of an overreaction, big move. I mean, we're down 45 points on the S&P. Guys, when you look at a 10-point move in the SPX, in the index, or in the futures, rather, that 10-point move one 10-point move is considered to be a full CAR, C-A-R. When you would hear a professional, an S&P trader call this, 4.5 CAR move, 45 points. Instead of worrying about how many, using numbers, they just use cars. That 4.5 cars, think of a train, that's a big train, right? 4.5 cars long versus a half a car, 5 points down or up on the day. So it's been a decent move. And it's also been 3 bearish days in a row that have taken place, right? 1, 2, 3, depending on where today closes. Who knows? We could see a complete reversal here. I doubt it, but we could. I think all the happiness is over from the year end. The Fed is out there with their we're going to raise rates mode, and I think it's going to start scaring some people, traders and such. So we're going to start looking at things like gold and some of the E-minis, and start looking into those places as places to hedge your monies. Now, you can do it with stocks. There are stocks that you can work with. GOLD. Right? Took a gap to the upside and failed today. Let's see. ABX, Barrett Gold, they took a little bit of a gap up. They've done horrible lately. Right? And then you've got all of these various stocks that you can look into. GG is Gold Corp. I do like GG. Right? But all of them have been hammered, which is why I like the futures better than the but then the stocks, the gold stocks that are out there. All right, so Joan said, can we trade currencies through eSignal? Do you use the fibs on the charts? Joan, you certainly can trade currencies. And what I would suggest to, Joan, are you trading currencies now? Do you trade anything on the currencies? And if so, what are you trading? No, you're not. Okay. So then my suggestion would be to look at things such as the mini-sized futures of Forex contracts. So as an example, here's the euro. This is the mini-sized euro contract, and I'm going to go ahead and snap a line at 4 o'clock a.m. All right, there's 4, there's 3. 3 o'clock is where the pre-market pretty much starts for Europe. 4 o'clock is when the European market opens up. So between 3 and 4, we were kind of flat. 4 o'clock, we took a nice little pop, closed at new highs, retested the moving average, and gave a nice little bounce there. And then we got this moving average cross took place right about 6:30 this morning. And market started to fall apart. That big candle right there would have probably scared you out on that move, right? That was from 47.70 up to 47.85, 86 or so. So about a 15, 16 tick move to the upside, and then we just completely collapsed, and we've been with it all day. And depending on how many points you had, how many ticks you had as your stop, you're basically trading the euro right here as a currency, Joan, and you're doing so with very small risk in this. Now this right here, this 6B is in Bravo, space, H is in Harold, 6. So 6B space H6 is the euro contract. Each one tick on here, one decimal point, it says 46.94, 1.4693 now. That moved down $12.50. If it went back up to 94 now, as it did, $12.50. And that may just be the difference of the bid-ask spread at this point. It is. It's just 93.94, 92.93. It's just one tick difference on the bid-ask spread in there is all that is. But instead of trading this contract right here, which has $12.50 of risk for every one tick, right now it's up to 95, so it's 2 tick moves so far. Let's go ahead and look at this one that starts with the letter M. M stands for micro. Oh, did I have the pound there? Guys, I'm so sorry. Good catch. Who was that? Scott. Good catch, Scott. It is the pound. I don't know why I've got pound in there, though. I should have. It must be from when we did the last E-minis class that we were looking at pound in there. So same scenario, though. Pound, euro, not much of a difference, but good catch there, Scott. So let's find 3 o'clock. This is the euro. And then 4 o'clock. All right, and we pulled down, came back up, and collapsed. And this one was, well, this fail right here was about 5 a.m. is when it started down. Again, lower highs, 1, 2, 3. I love it. That moving average cross was a great opportunity, or that retest. So this one is the one that's $12.50 per tick. On the M contract, that would be M6E space H6. So if you look at the two contracts side by side, there's really no difference. But if you look, you can see there's tracker mode on. So when my mouse is on the one with the micro on the left, the crosshairs are set up on both of them. You can see the pattern. Same exact pattern because it's the same exact position. What this is showing us is the micro of this contract. So instead of $12.50, each one tick is worth $1.50, $1.25. Is one tick if it were to go against you or in your favor, right? It's 1/10. So you can trade these then, Joan, with very small risk in this position, very small risk, where if you're wrong and it goes against you 10 points, you're underwater $12.50. It's really not a whole lot of money but you still have real money in the trade, right? So for those of you that are the type of trader of, no, it's got to be real, baby. If I ain't got real cash in it, I ain't got it. It ain't worth it to me. I'm not doing it. Well, that's fine. If that's you, then that's you. I'm not going to change you. But if you're going to risk real money, at least risk smaller amounts of real money by trading these types of contracts instead, in lieu of. All right. So, Joan, does that help? Yes. Okay. Excellent. And if you wanted to trade pure forex, yes, you can do that through eSignal also. Trade Pro Futures does forex and they do futures, so you could set both accounts up through them. Debbie said the emotion is so different than trading non-funded. Absolutely, Debbie, you're 100% right, which is where the value comes in here of using this position. Trey, who is the gentleman that is in charge over there at Trade Pro, Trey is an amazing resource, and he had been pushing me for a very long time to teach this to the students in the E-mini Trader Talk, because he knows that there are so many of you that are willing to jump in right now and just go full bore, and that's fine as far as he's concerned, but he's not looking at it as, great, if you're ready to start trading, I'll start getting commissions. He's looking at it as, if you're ready to start trading and you trade poorly, you're going to close your account. So go ahead and learn how to do this with smaller monies at risk. Joan said, do they trade 24 hours a day and do they expire? So Joan, they do trade that the same hours that the trade for the S&P. So basically they started at 6 p.m. on Sunday, and they will trade until 4:15 tonight. They'll close till 4:30 for a halt. It's not a close, it's a halt. And then they'll reopen again at 4:30 and shut down at 5 and close from 5 to 6. So and then they're open again until tomorrow at 4:15 p.m. Eastern. So yes, they do trade the majority of the day, 22 3/4 hours a day. And because it is the H contract here, Joan, in the upper left-hand corner, mouse is, because it's the H is the March contract. So it expires in March, just like the E-minis do. But the wonderful thing about this is it doesn't matter. It doesn't matter what the position is doing. Right now, this is at 1.0833, right? If I were to buy this right now and it goes in my favor, 10 points or 1 point, I'll make $1.25. 10 points, I'll make $12.50. If it goes against me 10 points, the nice thing is I don't have strike prices to choose. If we just grab, I'm just going to grab, let's see, I'm going to put a 21 tick stop on here. I'm going to grab 2 contracts. I'm going to buy it at market. Right? And you can see we're underwater, $2.50. 2 contracts, that's the bid-ask spread is all it is. Right? 1.0834 was our entry, and that's where we are right now. If it moves 1 tick up, we'll be at a break even as far as our cost goes right now, right? In this particular trade. So if you were to do this on the big contract, on the full euro, resize that. If you did this on the full euro, it's $12.50 if it goes 1 tick in your favor, or 1 tick against you. That's a double-edged sword. It works both ways. So what I'm going to do is I'm going to bring this one back up, get rid of the trading screen there, and I'm just going to resize it so we can keep our eye on it there. Joan said, are you teaching this in Chicago? Yes, Joan. I didn't do anything on this in my DVD series on E-minis. This is one of the newer factors that we're going to deal with in there. All of the contracts and all little nuances associated with them, we're going to be teaching in there. You're welcome. You're welcome. All right, guys, any other stocks you want me to look at? I'm going to pull up the YM now. So if you guys have other positions that you want to look at, by all means, go ahead and type them in. Yeah, Joan, it'd be great to have you there. All right, so let me go ahead and over to the YM. So the YM, for those of you that are unfamiliar with it, is the E-mini of the Dow, the mini-size future contract of the Dow. And I don't know, I gotta fix, I don't know why I'm getting no auto reset on my size there, but so guys, you could see, if we put our mouse right anywhere on this chart back here, this was on 12/31, right? 12/31, which is New Year's Eve. You could see here we have 405, 410, and then 430. So we had our regular shutdown. We go ahead at 445, 50, 55, 1800, 6 o'clock, okay? And then we open back up on January 3rd, which was yesterday. We opened back up yesterday at 6 p.m. All right, so analyze what happened. Look at where we closed off, and actually let me mark it with an arrow. So that big green candle right there is our opening price, our opening bar. So we had a big push up right on the open and a pullback. Can any of you tell me what you see of the significance of that level there? And I'm going to tell you it's nothing to do with what's back in the past, so don't worry about that. Was there any indication that that became a very important level on this chart? Where we opened up, that first candle where we pushed up to, right there, is there any indication that tells you, and it wasn't here obviously, that that was important? And if so, what was the level of importance? What made it important? Guys, I'm trying to drag it out of you. I can tell it to you, but that's not going to help any of you if I just give it to you. Let me get rid of this. Right, Jim says, actually, you're right, Jim. I'll just give it another minute in case someone else got an answer. I'm going to put it in there. Yep, there you go, Joan. Good. Same answer. Okay, Debbie, different answer, but exactly right. Okay, so Jim and Joan were the first two to type in that we had a resistance at that level. And what had happened was we pushed back up to that level right there, could not get above it, and failed. And that's where the moving average cross down came, guys. Now, I'm not sitting there and watching this, last night at 10 o'clock at night. It's just not what I do. Not on a Sunday. Sundays are tough for me to want to sit and watch the market since I do it so much Monday through Friday. Friday comes, I'm really excited about not trading over the weekend. I'll tell you why. Debbie, I was not watching. Wait, who did the Packers play? I was not watching. My brother-in-law had something on yesterday. The Vikings. Yeah, my brother-in-law had a game on yesterday. I thought it was Green Bay. But we were visiting with my in-laws yesterday. Vikings, okay. Awful game. I guess if you're a Packer fan, right? So guys, we failed right there. And Debbie brought up a second point that it was right near that 17,400 level. 86,400 were right there. Although I like the 100-point levels better at the, and I may be off a little bit here. I like them 100-point levels better on the S&P. I like 1,000-point levels on the Dow, on the YM here. But it served its purpose. We got that moving average cross. If you were watching this at 10:30 last night, there was an opportunity to take a bearish trade. You'd be in this about 66. It moved all the way down to, let's see, that was 366 down at 2. So call it a 100-point move if you caught the very bottom of it, which you would not. Which you would not have caught at all. But you would have gotten stopped out maybe on the move up, or depending on how you take your exits. On very big trends, using the moving averages as an exit is a good methodology to consider, whether it's the 8, the 21, if you're using 10, 20, whatever it is, right, that you're using as that exit, you would have still been in had it been the 21 and it rolled right back over again and just continued down, and you would not have been stopped out until 17,098. Whereas if you were in this at 375 and you're stopped out at 17,098, you're probably a really, really, really happy camper at this point. And let's see. So let me just, so I just heard a swoosh. That means we have the market moving in our direction on our Forex trade. So if we got in at, let's see, on the moving average cross, I think we said 366, right? So 366, if you waited for the close above the 21 period moving average, you would have been out at 1709, we'll call it 17,100. Would be the sorry about that, guys. 17,100 would have been the exit. That's a 266-point move in your direction. So if I can get my calculator. So if you had a 266-point move and it's a $5 move for every point, you're up $1,330 if you were only trading one contract. You just wanted to test the waters. You gave yourself a $50 stop or a $100 stop. You're just testing the waters. $1,330 was the move on this. Scott says, nicey nice. Oh, yeah, very much so. Paulo, how are you, sir? Happy New Year to you and as well. Hope all is well. Sorry for being late. Don't worry about it. That's fine. Meeting went extra long. I completely understand. I deal with it every day. All right, so guys, what if you didn't get this kind of move? What if you only took a 50-point move? It's a $250 profit before the market even opened up on a Sunday night. How about that? Put that one in your pipe and smoke it, right? Sunday night, and you're looking at a couple $100 of profit in there. Well, guys, we went on, and 7 o'clock this morning. It's about when I'm looking at the market at 7 a.m. That's where we are, 7 o'clock. Or have already seen this massive move to the downside. I notice that we keep getting these lower highs in place. And let's see, we got this high here. You got this high here, this one. Here and here, right? And I know they're not perfectly straight, but they're close enough, right? But there are lower highs that are setting up in there. Now I'm looking at the market. So, okay, where are we at next? We push back up. Here we are, 8 o'clock this morning. We get a push up, and what happens? We fail, and snap another line there. And then from here, we get the move, lower highs, we get the move below our moving average. That breakout right there was the entry, right? So you're in at 042 and 067, 65 is our resistance. So somewhere up above there is the stop, right? Go ahead and set that up. All right, so we're in this trade, right as the moving average cross took place right about 45. So let's call it 17,040 was the entry into this trade, right? 20 tick stop in here. By the time we pulled down, 21 tick stop. By the time we pulled down here, pushed back up. So where was our low? Right there, 995. The high was 031. 21 tick stop, you're taking out of the trade. So from 94, 15 is the exit on that trade. So if we came from 040 down to 015, you've got a 25-point move in there. I do 4 contracts at that time of the day. That's a $500 profit. The market hasn't even opened yet. You're still wiping Mr. Sandman from your eyes, for some of you. Some know you've been up for hours, right? And if Kevin is here, he's been up for multiple hours. Now, guys, if you use the moving averages as the setup and you saw that as lower highs and said, you know what, I'm not out of this trade. I'm not going to give it a stop. I'm going to make sure we don't violate that previous high, right? I'm not going to give it a stop because I got in here at 42. Even if it comes back up and goes against me, I'm looking at 30 ticks against me, which, you know, it's a smack, but you're not devastated by the exit if you're taken out. And what happens? We push down and we get another low, or another, you know, higher low. And then we get it here, and then we get it here, and then we get it here, and then we get it here. Aha! So at this point, what's happening? We pushed up above that previous high, that lower high that we had in there. But guys, now if you got in at 17,040 and you're sitting at 922, you've got well over 100 points that it's moved in your direction. Debbie said, but so much chop now. Right, Debbie, it's time of day. The question is, if you got in as we made the crossover, if the entry was on that breakout candle right there, Debbie, and you use the methodology not just of what you saw happening here, but of what has happened all night with these lower highs, and that's not all of them, guys. You keep going back and you're going to have that same thing over and over again, right? We use that same methodology for the reasons for being in the trade now. How low can it go? That's a good question, Debbie. We'll go over that tonight when we look at the pound F to see what it looks like. Right, so at this point you may say, you know what, I'm pulling the trigger, getting out of my trade, calling it a day. I'm going to lock in over 100 points, 28 from 40, 112 points. So guys, if you locked in 112 points on 4 contracts, that's a $2,240 move so far today. But Rob, what if it turns around and goes back down and I already got out of the trade? Then you get in again. That's all it is. It's just another entry. It's another commission. It's another commission. Now, anytime you get into the sloppy times of the day, you guys, and you're in this longer term trade, you really have got to decide, do I want to just pull out now or not? Because of exactly what's happening right here. Where, yeah, we pushed up and it tested it, but what did that form? 1, 2, 3 more of that triple top in there, and we failed. So if you've got a big profit in there, maybe go ahead and take some of it off and not all of it. See if it does continue to run. Because, folks, if we push back down to this 860 level again, that's another 60 points in that move. That's huge. That's a big potential. You got 1 or 2 contracts, another 60 points. That's the difference of a good day and a great day for many. Let's see. Did I miss anything in there? Oh, Beth says I'm a Clemson grad, so I'm a happy camper now. Okay. All right, so questions on the YM, guys. So do you guys like this? Not like it? Not really for you? Patty said, I love it. Debbie said, you know I love it. I do, Debbie, I do. And guys, 112-point move at $2,240 is okay. There you go, Joan. Good stuff. Yep, absolutely. Absolutely. And guys, if you caught this earlier, you know, if you're that 4 a.m. trader and you caught the lower highs and you used that break of the moving average, that at 17,070, let's call it, you know, at that 4 a.m., and you were willing to allow the risk to come back, even though it pushed up above the moving averages, and because you kept seeing those lower highs, and you were willing to sit through that risk, you know, and you get in at 17,070, and it's 17,070, and there's the push, right? So let's see, and we moved down as far as 870. So that's a 200-point move, guys. If you captured that full move in there, 200 points, right? You're looking at $4,000 if you had 4 contracts. Oh, but Rob, we're not killing it. You're not doing bad with it either. Debbie says Kevin has his monthly income just today. Very possibly. I mean, a trader could do that with moves like this. And guys, that's why, you know, the expression, you got to be in it to win it, right? You got to be in that trade. You got to be in the trade. Sooner or later, you're in the right place at the right time, and that's where the opportunity is. Debbie said it's bumping its head on the 50 moving average now. Okay. Let's see. Do I have a 55 on here? So I use a 55 instead of a 50. So it's right here. And funny thing is that 55 runs right through those tops of that failure this morning for me, you know, that 845 was the entry. Because 7 o'clock in the morning, by the time I see it, it's too late. We're already down here, right? I would have liked to have caught the rollover. That's what this was. That was the rollover I was waiting for, right on that big candle. Debbie said, how come you use different moving averages? Debbie, my moving averages are all predicated on Fibonacci levels. The Fibonacci number series is 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, and so on. So my fib lines, my fib numbers are my moving averages. Since I am a harmonic trader, I want to keep everything in tune with nature, everything. So, you know, even to the tune that I don't use a 200-day moving average. You know, I use fib levels. They're not very heavily used, but I use fib levels instead. So if I edit my chart here on Extreme Charts, you'll see that I have a 233 and a 144. So I don't use 100 and 200. I use a 144 and a 233. I don't leave them on there because if you watch what happens when I take them off, right, watch when I take off the 233, watch what the chart does. It stretches back up. All right, so that's why I don't leave them on. Yeah, Scott, I'll see if I can get someone this afternoon. If I don't, would you remind me tonight? You're going to be in the E-minis tonight? All right, so if I don't get it done today, just remind me there, and I'll bring it up. So, Debbie, does that make sense as to why I'm using those different settings in there? Yes, okay. Let's see. Debbie said, woohoo, got the rectangle breakout. There you go. Not Debbie, sorry, that was Francis. Good job, Francis. So what Francis is talking about is right here. I'm a big fan of rectangles. And you had this great rectangle in there, and the closing price of this stock was your breakout, your next candle. Actually, your next candle even stretched down, and the wick pulled back to the moving averages and took off from there. So 26 up to 50, 25 to 50, that's a 25-point move. Guys, if I'm day trading at this time of the day, I'll have 4 contracts for that 25-point move. That's $500 is what we're looking at in there, all right? So you know what I want to do? I want to go back and look at that micro. I have not heard another swoosh, so I'm curious as to what it's doing. Oh, look at that. It had moved up in my favor originally, and now it's backed off, and I am underwater a whopping $7.50. Ed said I did well scalping today. I bet you did, Ed. Today's been a great trading day. I did a whole bunch of little scalps in there as well today while maintaining a larger trend trade in there. So, you know, taking a bearish trade, but yet counter trend trading it at, you know, bullish and as well as bearish. But Scott said 750 blowing out the account. Oh, yeah, okay. Didn't know what you were talking about there for a second, Scott. Being underwater by 750, right? We're blowing out the account. Well, the nice thing, and you're right, good joke about it, but the nice thing is you've got very little at risk in this trade, and you can do it with real money. You're not worrying about trying to make a large profit here. You're worried about having your finger in the till and knowing what it's like to trade is what it is. Patty said, what are the most contracts you trade with the YM? 10. If I have a need to trade more than 10, Patty, then I should be trading the ES, not the YM. The ES is the S&P 500. There is much greater volume available on these, period, than there are on the YM ever. So if we go back to the YM, and if I maximize this chart right here, right, the watch list, you can see the ES6, the top one. 1, 2, 3, 1, 2, 3. 1 million contracts traded today, right? The YM, 80,000. Nowhere near. The NASDAQ has more. It's double of what the YM trades on the NASDAQ. But the YM I like because of the lack of the whipsaw, the lack of what I call the wickiness. When you get all these little whipsaw wicks up and down on your chart, all of that tends to not. And sometimes you will get that wickiness, but for the majority of it, the answer is no. Let's see. Just want to make sure I didn't miss anything here, guys. I know someone had put in Microsoft, but that is way off the screen here. All right, so that was Dan. So Dan, we're going to pull Microsoft up in a sec. Let me just make sure I didn't miss anything else on these. All right, I didn't. Let's go look at Mr. Softy. Big blue chip company doesn't move enough for me. Granted, we had the gap down today, but everything gapped today. Doesn't move enough for me, so I tend to not trade it. If we go back and look at the chart without moving averages on there, right, I'm going to draw my fibs from down here right up to about there. I've got a little bit of a reversal back in there, and then I've got some of this stair step taking place in there. I'm okay when the pullback happens early enough on that I'll take that lower low, right? And let's go back to the moving average template now. Okay, extreme charts just decided to blow up. Okay. There we go. All right. So right now I've got it in a neutral territory. Right. Earnings are coming out on the 20th, is it? 28th. Earnings coming out on the 28th. It's a neutral territory. It's down near the 55. For me to want to take, Dan, that bearish trade, I needed to get under that 55 moving average, and ideally the 8 crosses down through the 21. So break the 55, come back and retest it and roll over, and that's where I'll tend to take it. So I don't remember who asked the question very early on. That's like 500 or 600 lines ago, about the clear and concise. It was Patty. Okay. So Patty, here's a clear and concise entry. If you were looking at it, it gapped down to a resistance, right, or support resistance, whatever you want to call it, pushed back up and rolled over. There would have been a clear and concise entry. If we were wrong, the stop would have been just on the other side of that wick. Thing. Guys, I'm hearing swooshing going on, a whole lot of swooshing going on. And the only thing I have open right now is this Forex trade. We went from down $10, $7.50 to up $10 right now. So could you pull the trigger and just get out of the trade? You could. I've got a stop in place. I don't really have to pay too much mind to it. I put it in as a 21-point stop. Right now it's 17, right? 817. I got it at 34. It's a 17-tick stop right now. Dan, you're welcome. Right? So, and I didn't know this was happening until I heard the swoosh, right? Which is why I do keep my volume on the chart. Fairly tight bid-ask spreads in there as well. Paulo said, do you use or consider volume in your taking the trade? The volume today is bigger, period, Paulo, because of what's happened out there. But I look at more of the times of days of volume, and then I'll use volume as a breakout. So the trade right now that I took on the micros I didn't look at that and say, perfect setup, I need to do this now, right, for the YM, for the E-minis. But even whether it's the micro or the E-minis, I didn't look at it and say perfect timing for taking it. I took that one as an example, right? I'm looking at YM, and it's this time of day. If I'm going to scalp and I see a breakout on volume, that's a big indication, a big plus, a big help to me, right, for me to take that trade. During the regular hours, same thing, you get this breakout, that large volume, that one candle right down at the bottom. If you look right here, which is that 11 o'clock time period, you get that big candle of volume above the averages of everybody else. Yes, I am very interested in that as a potential trade, right? Again, depending on what it's doing. Big volume doesn't mean up or down. It just means there's more volume going on. So continuations. If that were to happen near a key area, concise area, key level, supports, resistance, moving averages, and so forth, a retest of the swing highs and a failure, then that, yes, Paulo, becomes a very important one for me as well. Okay, Patty. You're welcome, Paulo. All right. So, guys, when you go ahead and check out here today as we're finished up and the workshop is over here today, keep in mind the Monster Market Movers, guys. It is coming up quick, right? It is going to be January 12th, which is a Tuesday. It's my first one in 2 months. I got some good surprises in there, and I hear more swooshing. The swooshing's going on. So go ahead and get yourself registered for that, guys. If you want to learn how to trade these types of things, come to Chicago with me. Come hang out in Chicago. If you enroll in the 2-day workshop, in the 1-day workshop, you'll get the 2-day next step for free. All right, so enroll in that workshop. I know it's cold in Chicago, so what? Ain't that big a deal. You're going to be in the CBOE. All right, so it's not like you need to go out for anything. So there you go, ladies and gentlemen. We're done. I hope you enjoyed it. It's been great getting back into the swing of things. It's been a little bit now since I did one of these, 2 weeks, right? Since the last one that I did. So I'm excited to get started with them again. So with that, you all have a wonderful day. God bless, and I'll see you at the next update. Take care, folks. Oh, by the way, and for those of you that didn't know, I've got a couple of free online classes this week. Check them out. There's one tomorrow, one Thursday. One is at noon, one is at 7 p.m., and it's on that new Monster Market Movers. Take care, folks. See you all soon. All right, Paulo. Excellent. It'll be good to have you there. Take care now, folks.